Welcome back to the channel, Market Hawks, where we stalk the market. This is where you come get your financial gain so they don't run a financial train on you. A lot is taking place in these markets. Right now, there's blood on the street. I understand. But we just want to give you some basic understanding today and some basic lessons. And this is right here is not financial advice. This is just information that could possibly change your life. Right now we have a lot going on, but I want you to be able to understand the two type of investors. The basic two type of investors are the fundamentalists and the technical investors. The fundamental investor tends to look at cash flow statements, balance sheets. They like to look at PE ratios. They like to look at the book value. They like to look at the cash and the cash equivalents that a company is holding. They like to look at the liabilities, possibly the assets, and the debt. They tend to look at the industry and the competitors. Just things of that nature. That's the fundamentals. We like to look at the financial health. We take and put the company under a microscope. And we want to see what's going on inside of this company. Is this company healthy? Is this company wealthy? Or is it sick? And we look at the financial clues so we can make sure that we're going to make money and not run the financial blues. That's generally how the fundamental investor works, such as myself. I'm more of a fundamental investor. Then you have the technical investor. The technical investor tends to look at the behavior. They look at the charts. How has this company moved? What is the actual DNA of this company and the past history of the movements? When this company does this and it moves here, it usually does this. That's why you see all the charting. So don't forget, you have the two investors. You have the fundamentalist who looks at more of the financials, and you have the technical who looks at more of the behavior. And you have some investors that do both. Me, I'm more of a fundamentalist. Sometimes I look at charts, but I'm 98% a fundamental investor because it works for me. Now we want to talk about trends in the market because there are trends. Trends. We have bull markets where everything is optimistic. Investors are buying. They're looking for stocks to go up because they're looking to profit in a way that brings euphoria. Then you have bear markets when investors are pessimistic, they're selling off, stocks are dropping, kind of like right now what's going on, and they're not too happy about it. It tends to be pessimistic and a little bit of possibly uncertain. Then you have markets that can be range bound. When I say range bound, it's not going up, it's not going down, it's moving sideways. And it's trading, these stocks are trading in these particular prices. They're not moving a lot. They're here, they're there, but they're not going up, they're not going down. So we just covered the basics of the fundamental investor, the technical investor, the trends of the market. The bull markets where everyone's optimistic, the bear market where everyone is pessimistic, and the range bound where there's no certain way it's going, stocks are not moving up or down. Right now we have a lot going on in the markets. There's a lot of uncertainty. We had a major sell-off. The major indexes are down, I think about maybe 2 to 3%, something of that nature. I'm not quite accurate on that. What's happening is investors are uncertain. While they're uncertain, because you still have litigation and negotiation going on with how these tariffs will work out and what will be the policies. Then you have certain companies that are major economic barometers. In other words, they're major screenshots of what's happening in the economy. Walmart. Walmart came out, earnings was great. That's actually one of the companies that I actually own in several portfolios. So Walmart future projections were lower than investors wanted to hear. Why Walmart? Correlated. Walmart deals with almost everyone on a single everyday basis, possibly. So when their projections are low, that means the disposable income of the everyday consumer is not what it was, and it don't have the same buying power. So that spooked investors. That scares them to say, okay, they're not going to be as profitable. People don't have the same money they had, the same buying power. That puts uncertainty in the investor. So investors will be spooked by almost anything. United Health is a major player. United Health is actually a medical company that is major in that particular industry. Their earnings were not good as expected. These are barometers and screenshots of the economy. So investors looked at that and said, okay, the sentiment of everyday consumers is not optimistic and upbeat. So that spooks them to say, oh, it could possibly be a recession. Me personally, I think the market's oversold. What is oversold? I think investors got emotional and they sold these stocks further than they should be, which I can't say I'm for sure, but I'm maybe wrong, but I'm never in doubt. But I think the market's oversold. Why did you see the tech sector sell off so heavy? Because it was one of the most bought sectors. Tech was bought so heavy, so investors are a little worried. They made a ton of money. Naturally, think about it. If you put some money in, hypothetically, if you had put 100,000 in and you made 2 million, what would you do? You would take profits. You at least say, let me take 800,000, 900,000, possibly to 1 million, put it to the side. That's what's going on. The normal functions of investing. You make a large amount of profit that could be life changing, maybe not, but you're going to say, let me secure something to the side. So investors are selling off right now. But this is the time where there is great opportunity. And I always tell y'all, let's stay economically woke. While people spend money on things don't matter, we play broke because we should be investing our money into great companies. There's a lot of great companies on sale right now. They're undervalued. You have a value company financer going on right now because so many companies have been sold off and they're undervalued. Me, what I've been doing, I've been particularly buying. A lot of people are spooked. This is when you make your money. You get these companies on sale for cheap. When everything drops, that's when I tend to shop. And that's how I like to do. And I always tell you, wealth is made in your sleep, not on your feet. And that's how you have to see this. This is great opportunity within the market. Hit the like button, hit the subscribe, and pay attention. Now, investors have shifted their money to different parts. Different parts are Europe and they're in China heavily invested in Europe and China right now. When I look at a lot of things that's taking place, when I look at my Chinese companies, I look at Baidu. Baidu is the Chinese Google. That's been moving up. BYD is the Chinese Tesla. They actually are crushing Tesla, but you don't know it because they have a competitive advantage. They can take the same amount of material and do what Tesla do for less. That's PDD. What is PDD? That company particularly owns T-Mobile. And we're going to get into one of the monsters of them all. I call it the Chinese Amazon. What is the Chinese Amazon? Alibaba. Alibaba. If you don't believe in them, watch them. Jack Ma has fell back for a while, but he's back in business with AI, and he's doing it again. They're back from the dead. Pay attention to them. Alibaba, do I have stake in it? Yes, I do. I haven't actually bought the stock right now, but I have a couple of call options on Alibaba because I wanted to get a little bit of the action. So a lot of the institutions have shifted to China because that's where the money is. And I tell you, pay attention, listen to the cues so you can find the economic clues of how to make money in these markets. And don't forget, we went across the fundamental investor, the technical investor, market trends. We went across the bull market. We went across the bear market. We went across range bound, and we're talking about blood on the street. While the market has sold off, everyone is spooked, but I see it as time for great opportunity, buying time. This is what I'm doing. I think this is what you should be doing, but I always tell you, this is not financial advice. This is information that could possibly change your life. Hit the like button, hit the subscribe, and continue to pay attention to Market Hawks, where we stalk the market.